Good evening, everyone, and welcome. I am Divya Gopalakrishnan, and on behalf of CareEdge, I welcome you to our discussion today on navigating the MSME financing landscape, trends, challenges, and road ahead. We sincerely appreciate your time in joining us for this webinar. We would like to welcome our esteemed guest speakers for today. Rahul Priyadarshi, Chief General Manager, Small Industries Development Bank of India, Sanjay Agarwal, Chief Executive Officer and Whole-Time Director, Ambit Finvest Private Limited, Mr. Narayan, Barasia, Chief Finance Officer, SBFC Finance Limited, and Mr. Prabakaran S., Executive Vice President, RBL Bank. The session will be moderated by Sanjay Agarwal, Senior Director, CareEdge Ratings. We will commence this session with a presentation by Jitendra Meghrajani, Assistant Director, CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of any queries, participants are requested to key in the panel. We will take up your queries during the panel discussion session. Now, may I invite Jitendra to make his presentation, please?
Thank you, Divya. Good evening to all. Firstly, I would like to extend a warm welcome to our esteemed guest speakers and all the attendees to this webinar on navigating the MSME financing landscape, trends, challenges, and road ahead. We have compiled a short presentation and will follow this up with a panel discussion. Please note that the views of the panelists are their individual views and may not necessarily represent the views of the institutions that they may be working with. We'll start with a synopsis of today's event. We shall discuss about the huge trade gap in the funding and the lending opportunities available to fund the MSMEs. Various policy initiatives undertaken by the government, the ecosystem development, and the regulatory changes that have supported the MSME growth. The emergence of information as a new collateral facilitated by the India Stack and other digital solutions, which has enabled the MSMEs to have a better access to fundings. Such policy initiatives, along with the evolving processes, have resulted in robust growth in MSME lending space, with NBFCs leading the growth rate among the financial institutions in recent years. And lastly, we'll have a look at improving asset quality post-COVID, with the delinquency levels showing reduction across the lenders. We'll be covering these points in the upcoming slides. Today, we see a huge credit gap in the Indian MSME lending market. Using the assumptions from IFC report extrapolated with the GDP numbers, the total demand is expected to be 134 lakh crores, out of which 56 lakh crore is expected to be potential market size addressable through formal funding sources. Considering the current supply of 28 lakh crores, the credit gap is estimated to be around 28 lakh crores, a similar amount. However, with the formulation of economy, unaddressable demand, and the demand currently satisfied through informal funding is also expected to be institutionalized over the longer term, resulting in a potential credit gap of 78 lakh crores. The regulatory support for financial inclusion and the increasing credit gap are the significant tailwinds for the MSME lending growth. So to address the need for the formal credit availability, Government of India, RBI, and the other stakeholders have been working on bringing in policy level initiatives for improving the credit availability to MSME sectors. Some of the prominent schemes launched by Government of India to promote the credit funding include, but are not limited to, Pradhan Mantri Mudra Yojana, CGT MSME schemes, ECLGS launched during the COVID, and so on. Additionally, ecosystem developments like Udyam registration, digitization initiatives as a JAM, Open Credit Enabled Network, GST Sahai, and TREDS platform, along with initiatives taken by regulatory bodies, have also aided the overall growth in MSME lending. The challenges faced during the pandemic led to increased focus on digitization, resulting in faster loan origination, efficient underwriting, and cashless collections, all of which have been accomplished through ecosystem of GST, credit bureau, banking database, account aggregator access, eKYC, and so on. Further, the co-lending arrangement is emerging as an important and capital-efficient funding avenue for MSME NBFCs. Technological-driven MSME NBFCs are getting high preference over others in such arrangements. Lastly, The recent origination trend suggests that proportion of micro new to credit borrowers has increased and accounted for 61% of the originations in Q4 FY23 among the NTC borrowers, reaching a pre-COVID levels. The high credit demand of loans within this micro segment, along with positive lender sentiment has propelled the growth of NTC borrowers, contributing to the financial inclusion. Moving on to the trends in MSME originations to micro enterprises are increasing at a faster pace compared to the small and medium enterprises, with the share of micro enterprise increasing from 22% in Q2 FY21 to approximately 28% in Q4 FY23. In the terms of lender-wise originations, NBFCs are rapidly grabbing the share with a considerable increase from less than 10% in Q2 FY21 to almost 22% in Q4 FY23. Private banks continue to remain at forefront with highest share in originations. While public sector banks are the leading credit suppliers to the micro enterprises, private sector banks are the leading suppliers to small and medium enterprises. As mentioned in the previous slides, NBFC have seen the largest percentage increase in the share of MSME lending, and the same is also reflected in the loan book growth of NBFC compared to the banks. The NBFCs have reported over 3x growth in FY23 year on year compared to the both PSUs and private sector banks. Over the last 5 fiscal years, private banks have registered an 18% CAGR growth, while public banks have seen a growth of around 5% CAGR. Better yields, along with improving asset quality, have led to increased focus of private banks toward the MSME lending. Moreover, while the average loan size for PSUs have increased by 1.3x over the last 3 fiscal years, private sector banks have seen an increase of 5x, primarily due to a high share of small and medium enterprise lending. While on the other hand, NBFCs have reported a 31% CAGR growth in the last 3 fiscal years. This growth momentum is expected to continue across all these financial institutions, with NBFC growth expected to be 25%, followed by private sector bank by 15% and PSUs by 10% in FY24 and 25. The growth will be supported by improving macroeconomic condition, huge addressable credit gap, the government support, and the peaking of interest rate cycle. While NBFC's on-book lending to MSMEs has increased, there has been huge uptick in securitization of their MSME portfolio. These are primarily routed through direct assignment transactions. The direct assignment deals in MSME grew by 3.14x from FY23 to 9-month FY24, indicating the banks need to meet the PSL requirements and also to grow their MSME book. Coming to the asset quality performance, the delinquency levels peaked in Q1 FY22, post which it has been improving across all the lenders as well as across all the segments. As of March 23, micro enterprises reported the highest 90 plus DPD at 3.1%, while the small and medium enterprises reported lowest delinquency at around 2%. Under the micro segment, the exposures with a loan size less than 10 lakhs have shown highest delinquency at around 5%, while for the exposures with a loan size of more than 10 lakhs, the delinquencies were around 3%. Across the lender category, NBFCs registered highest delinquency at 3.6% in Q4 FY23, while the private sector banks are registering the lowest NPA levels at 1.4%. Among the borrowers with a credit history, there is an increase in share of high creditworthy borrowers, that is CMR score 1 to 3, across the MSME segments. Increase in share of low risk segments signifies improved borrower profile at the origination stage. While micro segment originations are largely dominated by borrowers with CMR score 4 to 6, small and medium segment originations are dominated by borrowers with CMR score 1 to 3. The share of borrowers with a higher risk category, that is CMR 7 to 10, is declining across all the segments. In upcoming slide, we'll be looking at MSME lending trajectory for care-rated samples of small ticket size MSME focused NBFCs comprising of secured, unsecured, as well as fintech NBFCs. Secured MSME is led by entities dealing in MSME lab and machinery, while unsecured MSME loans are led primarily by fintech entities. Since FY19, these NBFCs have reported a growth of 36% CAGR, which even includes the sluggish COVID years. The growth in the MSME segment depicts a strong ecosystem development, which includes the Udyam digitization, along with push by the government and regulatory bodies in the terms of various credit guarantee schemes. Keeping these factors in mind, CareEdge expects the AUM of such small ticket size MSE-focused NBFCs to grow by 35% in FY24 and further 25% in FY25. Due to increasing competition among the lenders, there might be expected compression in the yields, resulting in declining net interest margins. The other income in relation to the AUM size driven by off-book portfolio of the sample NBFCs are expected to remain in the similar range as the previous years. Operating leverage will be driven by better absorption of fixed expenses and slower growth of employee expenses in comparison to the AUM. Credit costs are also expected to increase due to increase in new to credit customers and micro loans, which are primarily unsecured. All this is expected to result in moderation of ROTA in FY24 and FY25. In the terms of availing credit, MSME sector still faces challenges, few of which includes the lack of collateral among majority of borrowers, leading to hesitancy among the lenders, the lack of credit history or financial record keeping, along with lack of awareness in the terms of financial literacy. Further, the seasonal nature of business cause hesitation among the lenders while extending the credit line. Going forward, CareEdge Ratings expects an upward trajectory in growth of small ticket size MSE-focused NBFCs with a projected increase of 35% in AUM in FY24 and 25% in FY25. The asset quality is expected to remain stable, although inherent risk remains in the space of microloans. With operating leverage expected to kick in along with compression in NIMs and increasing credit cost, the profitability is expected to moderate. The rise in co-lending collaborations and RBI's cautious approach to unsecured and consumers and personal loans creates a favorable environment for the expansion of MSME lending. In the terms of key risk, regulatory uncertainties, unfavorable macroeconomic conditions, a rise in the new to credit clientele are some of the key risk factors to the MSME lending. That's it on the presentation side. Thank you all. Would request Divya to take it forward from here.
Thank you, Jitendra. As conveyed earlier, all attendees are requested to key in their questions, which we will take up during our panel discussion. Now, may I invite Sanjay Agarwal to take over the session, please. Sanjay Agarwal is a Senior Director at CareEdge Ratings. He has 3 decades of experience in the field of ratings, banking, and infrastructure finance. Currently, Sanjay is heading the BFSI vertical of CareEdge Ratings. Prior to joining CareEdge, he has worked at ICICI Bank and IFCI. He has a bachelor's degree in commerce and is a chartered accountant. He is also qualified as a grad CWA, a financial risk manager from GARP USA, and as a certified financial planner from FPSB India. Over to you, Sanjay.
Thank you, Divya. Good evening to all panelists and participants. A very warm welcome to all of you. I also thank Jitendra for the presentation. So we have 4 panelists today, and I'm sure we'll have a very enriching session with this esteemed panel. So let me introduce the panelists first. So can we have the panelist slides, please? So our first panelist is Mr. Rahul Priyadarshi. Mr. Rahul Priyadarshi is a highly experienced development banking professional with over 3 decades of experience with SIDBI. He presently heads the direct credit vertical of SIDBI as the Chief General Manager and looks after MSME financing and development across India. Mr. Priyadarshi is the graduate in economics from the prestigious Hindu College, Delhi University, and has completed his master's in economics from the University of Kent at Canterbury, UK, under the guidance of Professor A.P. Tharwal, a renowned development economist. A warm welcome to Mr. Rahul Priyadarshi. Next panel, please. We have Mr. Sanjay Agarwal as a panelist, who is the Chief Executive Officer of Ambit, Finvest Private Limited. He has nearly three decades of experience in the financial services industry, mainly in the MSME funding. He's earlier worked with Standard Chartered Bank and Yes Bank, and he's a All India rank holder chartered accountant. A very warm welcome to Mr. Sanjay Agarwal. Our third panelist is Mr. Narayan Barasia, who is the CFO of the MSME lending body SBFC Finance. He has over 25 years of rich experience in various industries. And Narayan is qualified as a chartered accountant, cost accountant, company secretary, and as a chartered financial analyst. A very warm welcome to you, Mr. Narayan Barasia. Our fourth panelist is Mr. Rahul Prabakaran. He has about more than 2 decades of experience in BFSI across risk and relationships. He currently heads he's Executive Vice President with RBL, currently having the responsibility as the head of business banking, agriculture, and PSL lending, and also looks after tie-ups, etc. We warmly welcome Mr. Prabakaran to our session. So we now start with our session. Before we proceed to our questions, I would like to inform the audience that the panelists represent their personal views as experts in the field with decades of experience. The views expressed out here are not the views of the organization and certainly not the official views for the purpose. So I would like to start with Mr. Rahul Priyadarshi. So Mr. Priyadarshi, the presentation indicated that there is a credit gap of about 28 lakh crores. So how do you see this gap being covered? You are on speaker, right? You are on mute, Mr. Rahul Priyadarshi. You'll have to unmute yourself. Yes.
Yeah. Thank you, Mr. Sanjay, and thanks to CareEdge for having this webinar and inviting me as a SIDBI's representative. And a warm hello to all the panelists, other panelists, and also to the audience. So just to keep the things straight, I would address you, Mr. Sanjay, first Sanjay as Sanjay 1, and the second Sanjay Agarwal as Sanjay Agarwal 2. So thank you. So just to keep the confusion away. Now, once you have indicated the credit gap of 28 lakh crore, now whether you make it 28 or 30 or 32 or 35 or 25 lakh, the punchline is that there is a credit gap, and the hole is a very big hole. A substantial amount needs to flow to the sector. Now, this has been the trend, or this has been the figure across the last few years when IFC had taken up the study, and other agencies also. Now, if you take the number of MSMEs into consideration, some say it is already crossed 8 crores, some say 7.5 crores, some are still with 6.5. So, sum and substance is that there is a big gap which needs to be addressed. That is point number 1. Point number 2 is that each and every entity which is in the lending field is showing a growth. But this growth, even if we keep other things constant, ceteris paribus, if we go at this growth rate, even in the next 2 generations, we'll not be able to cover the gap. So the point is that how do you accelerate the lending to the ecosystem or to the MSMEs who are deprived of the formal credit in the system? Now, how do you do this? One, if we go the conventional way, I think we are not going to achieve anything. Maybe we show a growth of 20%, 25%, 30%, 50%, but that's not going to make a big dent into the gap that we are seeing. So we have to leverage technology. Now, if we leverage technology, so the technology multiplier has to be at least 10 times or 15 times the rate at which we are dispensing credit these days. Now, technology has to be taken into consideration where technology is one tool, but at the same time, when you have a little bit of lesser of human intervention, then the monitoring also needs to be done in a very diligent manner. So this is the second aspect. Now, the presence of various types of lenders. I'll start from NBFCs, private banks, public sector banks, and financial institutions. Of course, as financial institutions, we are a small player in the direct lending business. But having said that, the canvas is becoming big, the reach is becoming big, and the processes and manner in which we are dispensing credit has also changed a lot. So, one point is that there is a gap. The second point is that the conventional method of lending is not going to take us anywhere until and unless we ingrain the technological advances into our system. And third, with this technology adoption, we need to have a very, very robust monitoring and follow-up mechanism to see that the risk is mitigated, because the numbers are going to grow huge. Now, just to give an example, earlier what I used to do in a year as a financial institution, the number of sanctions. Now, more than 4 or 5 times that we are doing it in a month. Yet, even with this rate, I'm telling you, the place that we see ourselves with other things remaining the same, not very far in the horizon. So the whole issue boils down as to how we can take advantage of the technological developments, the data that is available in the system, rather than go through the conventional balance sheet method of analysis or whatever it may be. And also, the last point which I would like to make is that we need to collaborate. Unless we collaborate with like-minded institutions, which we have also started doing, perhaps institutions like us, which we don't have a reach to the last mile, until and unless we collaborate with more institutions in the ecosystem, we'll not be able to reach. So this is the pointer which I would like to leave at this point of time. More on this once you come back to me.
Okay, so in this same vein, while you already taken the figures of 20 and 25 as the conventional rate of growth, or I think that is the new Hindu rate of growth according to you. So what do you see is the credit growth, let's say, trajectory for MSME in the medium to long term?
See, what I see that it should not be in the entire segment. If I say short term and medium term, I'll not go for the long term, because in the long run, we all are dead, as John Maynard Keynes used to say. But in the short term and the medium term, until and unless, means that is my hunch, that we would definitely reach a growth of at least 35% year on year.
Okay, so we have a figure of 35%.
That's a ballpark figure, because with all these advancements being made, I think 35% should be achievable.
Great. So I think that's great news. So if we had markets open right now, probably some of these stocks would have taken a larger jump. So coming to Sanjay, so we just had Mr. Rahul Priyadarshi say that we need to collaborate a lot. So I think he also meant about NBFCs. We even otherwise see that the NBFC share in origination as well as overall loan growth has been increasing very rapidly. You have also worked in banks. So is there any segment or process where you think NBFCs would have a better ability to house the MSME loans in their own balance sheet? We'll come to the co-lending later. So in the own balance sheet, how do you say that?
Good afternoon, everybody. Thanks for inviting me for this webinar. I'm representing Ambit Finvest, which is NBFC focusing on largely MSME lending. I've been working in bank, as Mr. Agarwal has just said, and this is my first assignment in NBFC. There is a substantial difference between the business approach and appraisal approach of both these institutions. Banks are generally going after proven customers with the comparatively larger tickets, credit proven customers with the comparatively larger tickets. As the cost of servicing the customer for bank is slightly higher compared to NBFCs. And NBFC, for that matter, is focusing on underbanked customers, not so credit-proven customers, generally going for smaller tickets. And therefore, the numbers in terms of customers, they are addressing too large number of customers compared to a bank which is addressing by volume large volumes, but in number of customers, they are quite small. Due to changes in the environment, I think the government is trying to ensure that the flow of credit is reaching to the last person in MSME. Government has done a lot of changes, particularly which is benefiting both bank as well as NBFC. GST is now online, because of which we have data on our customers, whether it is small, large, or medium. All customers earlier used to say whatever they want to say, but now we have surrogate in terms of GST returns which are available at this point in time. We also have information about KYC through Karja. We also have a lot of information on their conduct of the credit through bureau development. And we also have a lot of information about the customers' credit history with other lenders, institutions. And then you have this technology which is providing you AI, and because of that, the social media scores. And therefore, in my opinion, there are a lot of constraints to grow at 35%, but it's a matter of time when the revenue record will also get digitalized, and then we will have a flow of information which is available to everybody, including banks. And the difference between banks and NBFC will come down dramatically, because the cost of servicing a customer and NBFC is thriving on those inefficiencies. So the moment the cost of servicing customers comes down on account of evolvement of technology, the difference will be very, very marginal. And the banks will also have the similar kind of access of the customers, and they will be in a position to service the same with the same speed to those customers where we are servicing. Therefore, I would see that the approach of NBFC should be more of collaboration and less of grow in isolation. So in my opinion, in next 15 years, we will see changes in the way in which we are doing underwriting, see changes we'll see in terms of addressing the customers, reaching to them by how we are sourcing and how we are taking collaterals. Government has taken a lot of steps in terms of giving guarantee for small loans. That will go a long way to create credit history for all such customers. And I think this is the way in which we can address the ever-increasing demand of small enterprises. I think this is a golden era for entrepreneurs in this space, and they should leverage fully. And lenders like us should try to collaborate with other part of like development financial institutions like SIDBI or bank, and try to figure out how to leverage the technology so that we can take advantage of this opportunity which is created once in a decade.
Okay, once in a decade opportunity, the golden era. Yeah, internally we were having discussions in terms of the growth of NBFC lending to SMEs. Will the growth rate hit 50% or will it be about 45%? So those are the figures far higher than the 35% is what you're figuring for 25 at least. And I think 26 should be on slightly similar lines. So thanks for that answer. I think it was a very detailed answer out there. And again, I'd like to discuss with Mr. Prabakaran that how do you see the yield shaping up for MSME loans in banks and NBFCs? Do you see any pressure? How do you see the yield shaping up?
Yeah, hi. Thanks to CareEdge and good evening to everybody, my co-panelist and audience. So I think I'm the only person who had worked in the credit and business. I think apart from Rahul sir and I think Sanjay. So I just want to cover how this underwriting is evolved over a period of time. So maybe in the past we used to rely on a lot of things on the borrower data. So now we have slowly migrated from borrower data to digital data, maybe GST or bank statement in terms of pull. So then you don't have to do a lot of verification. In the past, you take a physical data and you verify, then subsequently there's a cost involved in everything and time also, the time factors, which has been now reduced considerably because the data is fetched from the source system and you have wherewithal to understand on an ongoing basis. It's not only at the time of underwriting. On an ongoing basis, you are able to monitor these deliverables, be it bank transaction, be it GST, be it any other parameters. So that's, I think, helping banks in terms of doing underwriting. I think having my co-panelist already covered some of the areas. It is also helping banks, the various schemes which is given by government, and as a development institutions, SIDBI is also in the process of, I think today the large information which we can rely on is bureau information, but GST, I think SIDBI had come up with the fit rank, which is actually giving the behavioral score. Apart from the the past history, it is also giving transaction data based score, which is helping the banks to underwrite better customers. So they can differentiate between a customer who had a past delinquent history with a better transaction structure. That's one big tool which is available. And I think they're also working with Jakarta, which is giving Sampurna score, which is also giving in which are the industries which is in the growth space. So there are a lot of data available. So with this, I think banks are also evolving over a period of time in terms of reducing the sourcing, underwriting, and servicing cost. If that happens, there is a chance that over a period of time, today the margin is anyway a function of your risk and reward. Suppose if it is a better rated customer, because everybody is having a scoring model. Each individual institutions will have their own scoring model. Based on the scoring model, risk reward, you price the customer. So I think one large benefit also to the banking institutions or the financial institution is most of this underwriting which we do today, it's all falls under various categories of PSL, because there is a element of banks have to fill in about 7.5% under micro category, which is a kind of essential thing. So with the better data quality, so I might slightly charge less to those customers which is falling in the better risk profile, so that I also achieve two things. One is my credit growth is taken care of, and parallelly the banks also can achieve the PSL target which is there for as a part of ANBC. So on this space, I think I think there is no single solutions in terms of NIM, but I think over a period of time, people are targeting towards a better risk reward customers. For those customers, NIMs may come down, but I think banks also trying to do not only earn income only from the credit, so they're also trying to penetrate into their value chain in terms of their payment solutions, in terms of promoter account, getting into their other payables, their servicing opportunity. So I think it's not that we would try to make money from one particular aspect of loan book. You try to make small portion of money across the services which you give it to the customer, which I think which will take care of your NIM fall on the loan book and liabilities also.
Okay. So you see that there could be a potential sort of a NIM fall as we grow in size and as we go ahead in the efficiency.
Yeah, because I think my cost of sourcing is also coming down, because from the traditional underwriting model today, I don't need to send my relationship manager to the field to verify their operations, because I have AA tool available where I can just pick up the bank statement, and I can also pick up their GST data through a consent model, which will help me to at least monitor. So my monitoring is happening to some extent through digitally, so which will also reduce my cost. So my RM's productivity, maybe as Sanjay sir, as Rahul sir said in the first conversation, he said his monthly run rate has gone 4 times compared to the annual run rate. So that's what I think will take care of the NIM fall also.
Okay, so my next question is to Narayan. We had Mr. Sanjay Agarwal saying that banks, NBFCs need to collaborate rather than stand in isolation. And when we are looking at that, and when you look at the off-book lending for the MSME focused NBFCs has been growing. So do you think co-lending and securitization will be the key drivers for NBFCs? How do you think the direction, or will it be the balance sheet which will drive the growth?
Thank you, Sanjay, and thank you, CareEdge, for hosting us for this webinar. So if you see a classic manufacturing concept, the whole ecosystem of manufacturing survives with the development of tier 1 to tier 2 to tier 3 vendor. So let's say iPhone. If iPhone has to be successful in India, the manufacturing of electronics has to be successful in India. Not only we can't do just assembly, right? So for that we need a tier 1 vendor to be developed. The tier 1 has to do a tier 2. The whole localization has to happen, and that is where it happens in the financing system as well. So banks can't do everything themselves, right? To the lower the ticket size you get into, it is very difficult for banks to do a direct lending because of several issues. One is the cost of reach. Prabakaran talked about a lot on that. It becomes very difficult to reach customers and find out who are the approachable and reachable customers, the genuine customers whom we can lend. Just to give our data on that, in our system, if we source 10 customers, finally only 2 gets loan, right? 8 gets rejected either because of CIBIL or because of security or because of any other different assessments we do. So the cost of credit, the cost of giving credit becomes very high. The second is the cost of collection becomes very high. The lower the ticket size, the cost of collection is very high. So in a way, more and more smaller the size becomes, it becomes more and more expensive to deliver credit to them. So banks becomes very, very difficult to lend directly to the customers, particularly if you have to make sure that MSME really grows and thrives in India. What we need to do is look at the bottom of the pyramid and see whether tier 4 vendors can actually get credit, in which case the whole localization of the sector, whichever sector we may talk about, either automotive all the way to electronics, happens in India. So I think collaboration was in any way happening between the banks and NBFCs. We are still borrowing from bank and lending to customers. So in a way, it is also a collaboration, indirect way of collaboration. A direct way of collaboration is co-lending, where we actually jointly sign agreements and give loans to customers. And when we give loans to customer, the advantage NBFC gets there is we also get access to a lot of data which the banks has, which we as NBFC don't have access to. So a collaboration helps both ways. We are very good on the ground in terms of reaching out to customers, assessing customers, and also collecting money from them. And from a bank side, we also get access to a lot of database, which as NBFC we don't have. And this collaboration of money has always been happening, as I was saying. With co-lending is actually significantly improved.
Okay. Thanks. So my next question is to Mr. Sanjay Agarwal. So now there has been an increasing digitalization and technology intensity, like all our panelists have spoken about. So has that intensity, the leap which has happened due to the technology, digitization, etc., has that been fully realized, or there's still significant steam left in terms of growth potential?
So, see, technology is never say it is fully developed. That word generally is should not be used in terms of technology. One thing which I realize in financial services that while there are some infrastructure which technology is providing, like say CIBIL score or bureau score, or for that matter even bank statement analysis, because they are now available in machine readable format. We call it PDF or whatever it is. But the technology vendors are still not reached to a level where we can say that they are price competitive, they are tailor-made solutions are available for MSME, or they are providing the solutions which is required for each kind of lending, whether it is tier 3, tier 4 lending, secured, unsecured, or to meet MSME requirement in hours or maybe in few days. So most of these technology are subpar in my opinion, even today, apart from the infrastructure which has been developed. And therefore we are constrained to have our own technology platform being developed over a period of time. And each of us are developing our own platforms, whether we call it LOS, whether we call it rule engine, whether we call it AI, whether we call it BRD, whatever we call it. Each is costing a lot, and therefore delivery of credit to ultimate customer is very costly. And none of the large bank is taking interest in developing that technology because they are not addressing to this kind of customers. But I think with the time and the money which is being attracted by this sector, a lot of people will be successful in developing a technology which is end-to-end solution for delivering credit and ultimately doing collection from these customers. But as of now, I would not say that technology even at 25% level to our satisfaction. So a lot of ground to be covered by technology. And I think in next 15, 20 years, not 20 years, 5 to 10 years, I think the technology will find solutions, which is India specific solutions, which is specific to MSME sector and specific to NBFC. And once we have that available, then it will be level playing field between banks and larger NBFCs and smaller NBFCs. But till that time, each will have to incur its own cost, and that cost will keep reflecting in the balance sheets of all these companies. And this is where the difference is there between a successful NBFC and not so successful NBFC, because the sooner we develop technology solutions, the better it is.
Okay. So you're saying we still have a long way to grow in terms of technology itself delivering and then to get the full fruits out of the technology.
I'm saying vendors are not available in the market who are providing cost-effective solutions for delivering very, very effective credit and collections from these customers.
Okay. And a question to Mr. Rahul Priyadarshi. There has been an increase in NTC customers in new origination. So is the market taking additional risk to support the MSME growth, or this risk is largely mitigated? How do you see it?
No, see, new to credit, I don't see that it's a risk that we are taking. Now, when you say new to credit, of course, the entry point has to be defined at some point of time. They have to come into the formal sector, a formal organized sector of borrowing. Now, the whole point is that when the new to credit is there, it could be because the greenfield nature of the project, or some have just started small and they want to go up in the chain of borrowing. But the point is that now the due diligence process of any customer has become robust. The lenders themselves have made some advancement in this field, and the availability of various data is also there. Third part is sometimes when it's a completely new entrepreneur who has had no borrowing experience, and the bank or the institution is going to take a risk. So once the due diligence process is on, they do look at the background, they look at the understanding of the person, they look at the various nuances of how the young borrower would be able to service the loan or not. Now, in the entire process of this underwriting, I think the advancement, the understanding, and of course the data sets that are available in the public domain, they all have given a boost to the lending activities. Now, having given a boost to the lending activities, it will be a presumption to say that the NTC will be carrying more. When you give more to the new to credit, there will be more risk. Of course, it is a risk because you have not seen the borrowing history of those customers. But to make a generalized statement that new to credit, that would entail a higher amount of risk, I think that I would not agree completely to it.
Okay. So there is a question from the audience that I think probably from a business perspective, they are asking what marketing channels and strategies have been most successful in reaching and engaging MSMEs who may be interested in financing solutions. So probably Mr. Sanjay Agarwal could answer that. What marketing channel strategies have been most successful in reaching and engaging MSMEs who may be interested in financing solutions?
So far, we have used all sort of channels. We are omnipresence channels. And based on experience, it has to be touching the customer. That means reaching to the last customer physically and convincing him to come on the board. That is the methodology that is the source of business which has worked well till now. We wish that we can source customers through technology, but there is a lot of hesitation in sharing information, and there is so much of phone calls are going to the customer that they are finding it difficult to judge between a genuine inquiry or a genuine lender or not so genuine lender. And therefore, till now, it is working only customer to customer touch, which is reaching to the last mile customers and persuading him, convincing him, and getting the customer on the board.
Okay.
Basically, faceless, just to add what Sanjay said, Mr. Sanjay said. So I think faceless lending is still not taken fully the shape. Maybe I think in few avatars like threads or an anchor based lending. But in those cases also, at least you are reaching out to the customer is always an important, because you need to get at least to see what is happening at the ground. So you need to see the promoter and you need to engage with him, especially from a bank's perspective. You need to engage because you are going to be at a competitive rate. So how can you engage with him in a full spectrum of products which can be offered from the banking system? So in that way, I think there's a kind of digital data collection, at least reaching out to the customer, collecting data digitally, analyzing digitally. But I think delivery is also to some extent digital. It's possible. But I think you have to meet the customer. Still, I think people have not come that way. It's like a faceless lending is possible.
So again, a question to Mr. Rahul Priyadarshi. Asset quality has improved significantly in the last few years, and we've seen that especially in the MSME, where double-digit NPAs were the norm. Now we have significantly strong asset quality data, which is also reflected in our presentation from SIDBI's data sources. So do you think this trend will reverse as the financing reaches even more the NTC or the lower level of society, or do you think this is a pretty strong sort of a permanent advantage that we have got now?
See, just connecting the point where I had left earlier, I think the entire process of diligence has become so robust. And I will just try to differentiate between, and very well said, Prabakaran. The point is that there are two aspects. One is the faceless, where you can have some unsecured loans and very small ticket sizes. But beyond a certain point, the concept of faceless doesn't work. Even the borrower will not feel comfortable coming to you if it's a faceless channel. So this we have understood through our various interaction MSME outreach programs across the country. And that's where I say that, yes, the element of faceless is there, but unsecured lending, personal loans, etc., you can do there. MSME lending or even other sort of lending, you need to have a personal touch and a physical touch with the borrower. That's point number one. The second point, to exactly answer your question, and I borrow from the first point where I have left, that new to credit, I don't think that this is going to be a reason for becoming a little skeptical about borrowing, about lending, and then seeing that this may turn the edges of the NPA levels again. I don't agree to that. Maybe here and there some incremental value may accrue to the NPAs, but going by my experience, I can tell you, Sanjay, Mr. Agarwal, Sanjay Agarwal, Mr. One, that in the last few years, the NPA trends that we have seen in our institution, the NPAs of the last 3-4 years when we have started using the digital diligence processes, and of course using the publicly available data, and also bringing into our fold a large number of NTCs, we have not seen any step up in the NPAs. So I don't think that this trend is going to reverse. One, there has an increased and a better level of due diligence which has set into the system, the publicly available data, the digital data sources that are available that give extreme value for when you do your lending. And of course, there has been a perceptible change in the mindset of the entrepreneurs. As young officers, when we used to see, the first thing when we used to sanction was, please transfer the money, please transfer the money. It doesn't happen like that. One sanction, it takes 5 or 6 tranches of disbursement to be completed, and with repeat follow-ups, because they do understand that if they fail And if they are classified as an NPA, their career is gone. Probably no other lender will come to them. So that's a very big mind shift. And because the financial system has become so integrated, so those things have made a lot of difference. And I'm telling you that in the last 15, 20 years of my 20 years when we used to work in the prime centers of Nariman Point in Bombay, any sanction happening in the morning, the gun used to be on your head. Please give us the disbursement. Please give us the disbursement. It has changed completely. Disbursement is requested only when the need arises. The entrepreneurs are very smart. The entrepreneurs have become very tech savvy. The entrepreneurs have become very financial savvy. So they don't want to pay you even a single extra rupee on interest. So all these things put together, I am sanguine about it that the trend of NPAs, which you are asking whether it will reverse, my considered opinion is no, it's not going to reverse. Maybe here and there, up and down, it may come and go up and come down, but it's not, the trend is not going to reverse for sure.
Okay. So there's an audience question which I'll ask Mr. Prabakaran. How the payment period of 45 days has affected the MSME? Is it bringing more credit or is it making the credit stable?
No, this is, I think, double-edged. So there are certain MSMEs, suppose it's the anchor corporates or the bigger corporates who's buying from MSMEs, they have a mandate. It's like, especially in the month of March ending, so they have to completely square up. Otherwise, they don't get this kind of expenditure is ineligible for their expenditure in the P&L. So there is a pressure from the corporate side. Maybe some MSMEs are saying that I will go out of them, but I think that's a good sign from a long term. So we should not see that one particular year because this is implemented, there is a delay. I think government said this, they will do it from April. We should not see this 1 year, but I think this is an effort which I think government is trying to bring, starting from GECL, bringing CGTMSE to 5 crore rupees, and giving a lot of various GEM Sagai, because now all the government expenditure is put into a GST GEM Sagai portal. So that's also giving, so that at least there is a visibility of cash flow coming in. So I think we should not look at short term. In long term, when GST introduced, we had the same doubt in our mind whether it will improve over a period of time. But I think we have seen 5 or 6 years down the line, we could now see there is a good change. Because of that, I think now we could able to underwrite fast and we're able to rely on the data. I think that's the same thing we should see. Don't look at temporary because it's only a temporary flip. But I think long term, this 45-day rule is going to be a good for at least lending institutions, because you are at least know that if you are dealing with a corporate, so they will ensure that at least they will make the payment within 45 days. So I think that's a positive direction. It's only a temporary flip, according to me.
Okay. Now coming to Mr. Sanjay Agarwal. So in terms of risk, do you see any stress or in any sector of manufacturing or trade or services within the MSME lending space?
So because of easy credit, there are some sectors which are showing stress, but as Mr. Rahul has mentioned, it is not trend reversal kind of a situation. The historical low NPA may be on account of post-COVID reversals. People are in a position to do recovery, and that is getting adjusted towards NPA. So maybe because of that, it is slightly better than what it should be. But because of the technology availability and because of the correction which we are in a position to do immediately, I think the more or less most of the sectors are doing well. However, in textile and in some of these sectors where receivables are very long, you have seen slightly higher NPA compared to a sector where you have an asset light and the receivables and stocks are moving very fast. So I would say that commodity sectors are slightly inferior compared to manufacturing and services.
Okay. Again, question to Mr. Rahul Priyadarshi. The government initiatives and schemes have led to significant growth in the industry. And will this continue? That's the question number one. Other is that other than initiatives taken by government and its bodies like SIDBI and all, what are the other supporting factors that can drive growth even further?
There are two aspects. One, that the government, which has initiated the helping hand, has extended the helping hand to the sector. There is no denying the fact that any government that would come to power will definitely will consider the pains and the miseries of the MSMEs. That is point number one. And going ahead, all the and since there is a different ministry, separate ministry for MOMSME called MOMSME, that in itself shows that the government or the has been very particular about the sector. Now, year after year, you see some or other interventions in the sector made by the government. Prime example being the COVID years, when the emergency credit line was extended, and that gave a breathing space to so many of the MSMEs. In fact, some of the MSMEs used to comment that, sir, COVID has made us alive. Otherwise, we would have not been in business, but it has given us a booster and we have been able to survive. Notwithstanding the fact that some did did not see the light of the day post COVID, but those numbers that we have experienced are very few who could not withstand the COVID onslaught. And even with the government help, they could not sustain, but those numbers are very few. That is point number one. And the government's help is definitely going to be on a long term, continuous basis and on a sustained basis. It is not going to pull its hand off the MSMEs. And you would have seen in the last decade or decade and a half that every time and again something or the other is announced for the MSMEs. Either the definitional change is there or the credit linked capital subsidy scheme is there. Many of the viewers who may be MSME entrepreneurs, they will definitely ask about when will this scheme again come up. So that has been that amount that was allocated has finished, and now maybe the government will take up again. Now, in fact, with the support of the green financing, even there the government has come up with certain new subvention scheme where certain amount of loan you get a certain amount of subvention. So the trend is definitely there of extending a helping hand, but it is also a hand which is going into different directions: subsidy, green financing, ESG related aspects, technological development. Now the government has also got very strong about making the Indian defense sector Atmanirbhar. So defense is another sector which is now we are working upon, and we are going whole hog in that sector. And there is immense potential in that sector. Now you never know that the defense sector, the government may especially come up with certain, I don't know, but it may come up with certain schemes for the sector itself where there is a huge potential. So my take is that MSME sector and government, the government will always be looking at it with the eyes of a benevolent government, where they'll always see the problems, study the problems, and come up with some sort of a solution or a helping hand to overcome all those problems.
Thank you. Another question is on borrowing cost. This is to Narayan. So do you see any uptick in the borrowing cost post the RBI circular on lending to NBFCs, etc.? And has the cost remained sticky onto the NBFC balance sheet, or are you able to pass it on to your customers?
So RBI did two things. One is increase the risk weightage. And also what it also did was communicating that NBFC should go to the capital market and borrow. The bank's dependence on NBFC should reduce. Now, if you see, there has been about 250 basis point increase in repo. leading to almost about 200 basis point increase in MCLR by private sector bank and almost about some 130, 140 basis point increase in MCLR by PSU bank. So already the cost of borrowing has increased a lot, and obviously as SME customers have already borne that increase in cost. So all the costs as of now, everyone, all the NBFCs which I'm tracking has been able to pass it on. So the challenge is as you go along and continue to increase your cost of borrowing, the ability to pass on becomes challenge. So far as you are able to keep the EMIs constant, it becomes very easy for the customer to make the payment and make sure that the customer doesn't become delinquent. The moment the EMI quantum goes up, the amount of EMI goes up, that is where his cash flow goes for a toss, and that is where the delinquency in the system increases. So it is very important for NBFC like us to make sure that the EMI actually doesn't go up, to make sure that the delinquency in the system doesn't go. This increase in the risk weightage is obviously going to impact NBFCs. What is going to happen for sure, and what is happening is some part of the cost is getting borne by the bank itself. So in a way, the bank's NIM are going to get compressed, and at the same time, some costs are getting passed on to NBFCs, which possibly now after such a significant price increase, which has already happened, it will be difficult for NBFCs to pass on this incremental price increase to the market. The moment we do it, it is definitely going to impact the ability of the customer to repay the loan.
Just to add what Mr. Narayan said, I think the regulator has mandated for all MSMEs pricing to be linked to the repo. So as and when there is a increase or a reversal of pricing, so that they are getting the immediate benefit of cost repo increase or repo decrease. So I think this pass-on cost is already factored in at the time of initial funding. So whatever spread which you link it based on the risk reward. So I think the cost is definitely getting passed on to the customers. It is based on the repo, not based on the risk weight or other conditions, which is the cost which either has to be borne, because you can't increase the spread in between.
Okay. So there is a direct audience question for Mr. Rahul Priyadarshi. So how can banks and NBFCs increasingly incorporate ESG considerations in the MSME lending?
So I can answer on behalf of a financial institution like us. I cannot answer on behalf of NBFCs. But the point is that increasingly this ESG framework is going to get ingrained into the system. We've already started that. And the point is that we need not put it in a manner where it will become either an incentive or a penalty if you are not conforming to it. What we have done is, and what my view is, and my institution's view is, that we should start off with by analyzing the readiness of the entity, whether the entity is ready, whether the entity is just about to reach that readiness level, and the entity is not at all ready for the ESG considerations. Now, these three types, when we say, and of course, the compliance of all the ESG considerations also have a cost attached to it. Now, when a cost is attached to it, definitely the demand will be for some incentives. And for ESG to become successful, I think some amount of incentivization has to be done to the MSMEs, because they are taking it for the first time. And globally, when they are part of the global supply chain, this ESG is going to become a big factor for their existence. So one, the ESG readiness should be started by all the lenders, post which the system of incentivization or disincentivization would creep in. Thirdly, ESG is going to get ingrained into the system in a manner where you will not be able to function if you are not ESG compliant. Of course, that will take some time, but the day is not far. So we need to be cautious about it. Third thing is that people need to be sensitized about it. Wherever we are going ahead, wherever we are having interaction, we are informing about the green financing and also about the ESG considerations. So green ventures, ESG considerations is something we are taking up in a very big way. So to sensitize and educate the current borrowers as also the prospective borrowers. So one sentence which had come up in the presentation was that a lot of MSME focused NBFCs are going to come up, and MSME focused NBFCs are in the field. So we are happy to work with all of them, and we would be happy if they can approach us, and CareEdge can also help us in approaching them. We'll be happy on both the fronts. On the lending side also, having a relationship with them. It will be not a core lending for their on lending, but we can have different sort of arrangements where they can reach the last mile. And also in the process, because their reach is much higher than ours, we can take up the ESG matter also to the last mile, where it will be beneficial for the entire ecosystem.
Thank you, sir. I think a lot of us will be hearing about it and slowly getting back together. So we
Correct.
already significantly overshot time. So only one question from each of the panelists. So is this the inflection point for MSME? So probably Narayan, you can start first. So
if the GDP of the country has to grow at a 6 to 7% or 7.5% level, the whole basket of MSME, will grow at a 20-25% level. So that is the way the growth is going to happen. India is certainly at a very good inflection point as an economy itself. I think whether you see the global countries, what is happening across the board, we are certainly at a right inflection point. When it comes to MSME, what is happening is, from a digitization perspective, the more and more income tax filings are happening, more and more GST returns are getting filed. It actually becomes very easy or relatively easy for NBFCs or a bank to assess the customer. The real challenge to today is to assess the customer. How do you assess the customer if the formal data is just not available for a customer? Digitization is actually helping us. And so more and more credit is going. NTC is bound to happen when 50% of the customers are unserved today, right? So there's nothing to worry about NTC so far as the formal data source like income tax return, the GST return, the availability of bank statements, and also to add is, even though they may be NTC for a formal commercial credit, they are generally borrowing some small loan, maybe two-wheeler loan, some gold loan, some small loan, and they may not necessarily be new to complete banking system. So I think with digitization, with the way the economy is moving, it is certainly at an inflection point. The whole question is, how do you deliver more and more credit to particularly the bottom of the pyramid MSME? I think that is where the big challenge is. If MSME has to do well, the money has to reach to the bottom of the pyramid.
okay, Mr. Prabakaran.
Yeah, just to add what Mr. Narayan said, I think definitely this is a golden period. Mr. Rahul sir also said that India is focusing towards Atmanirbhar across various industries. I think they have launched a lot of PLI schemes which will bring the manufacturing to India. So obviously, when the manufacturing setup comes, the allied small, the tier 3, tier 4 vendor also the ecosystem has to develop around the big manufacturing units. And I think the government is also focusing on diversifying. It's not only focusing on certain specific industry. So they want to diversify. So bring their focus is not only on increasing manufacturing, increase your exports over a period of time so that you manage your FX volatility as well. And I think the other thing is a lot of customers coming from informal to formal. So they might be borrowing from a local money lender. So they're coming to a formal ecosystem because of the data availability. And I think one big tool which is made this MSME lending possible today, the digital collection by using your QR code, UPI. There, I think the cash element is slowly getting reduced over a period of time. So at least today, you can see 60-70% of their sales through a digital means. So I think that itself is one of the tool for your assessments. You don't need to depend on, each industry, what is the general gross margins. If you know that, and on top of it, you put GST bank statement, which will give you what is the turnover. So you can easily assess limits with the help of the government support available for this kind of informal enterprises. I think definitely this the unaddressed population of 28 lakh crore, what you said, definitely this can be, if everybody works towards this, this can be narrowed down over a period of time, and that is an opportunity, because I think today you don't have, when we talk about banks, there is a big competition on organized borrowers. So somewhere you have to go down one level down to increase your spreads, but with the risk mitigations, with a better monitoring. So I think that's an opportunity according to me.
Okay. So, Mr. Rahul Priyadarshi, final word from you.
No, no, I think the other panelists have summarized it very well. The country is on the growth trajectory. The level of penetration that the MSME has in the segments in the economy, the country cannot develop without the support of these MSMEs. And I see fire everywhere. Even in the states which were considered to be backward in terms of industrialization, if you see the development taking place, absolutely fully on fire and very young entrepreneurs coming up. Now, when I say young entrepreneurs coming up, the point was new to credit, but some form of borrowing or some business experience they have. So we need to support this new breed of entrepreneurs. And that is where we try and take the risk of giving loans to new people entering into the business segment, the greenfield entities, where we always say that until and unless more and more new people are brought into the system cannot survive by giving loans to only the existing entities. So I think what has been said by other panelists, just one word, the country is on fire, the growth trajectory is looking very good, and the MSME is definitely going to support this growth trajectory and thereby making a great contribution to the Indian economy. And without the support of MSME, I don't think that the Indian economy will be able to navigate into this projected growth trajectory that we are looking at.
Right. So, thank you, sir. I think
Thank
we
you.
already shot our time significantly at 15 minutes more than the scheduled time. So, we would like to pause here. There have been some queries from the audience which you could not answer due to lack of time. But we'll take it up in some forum or the other at a later point. So I thank all the panelists, including Sanjay Agarwal, who had to rush out due to his requirements. So we thank all of you for your candid views. The views are extremely candid and very enriching, as we always thought, but very candid also. So thank you all very much for spending so much time. And I would now like to hand the proceedings back to Divya. Divya, can you take up, please?
Thank you, Sanjay sir, for moderating the session, and Jitendra for your presentation. Once again, thanking all our guest speakers for their insightful views. It was a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of the CareEdge webinar. For any further queries, feedback, or suggestions, please write to us in the feedback mail. Goodbye for now, and I request the tech team to kindly log off.